Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, kicking off a fresh new week. And it's an important one with lots of news flow as we come into this weekend, but of course also tracking whether after 2 weeks of relative consolidation for larger indices, whether we make a bit of a move or not. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, morning.
Hi, morning Prashant. Morning Nigel. Morning to all our viewers. I have a confession to make. Only four hours of sleep. But it was so worth it because of that game last night. Yeah. Mumbai Indians out. But, and I've missed a lot of games because of one reason or the other. I'm not the biggest cricket buff. But just luck, pure luck to watch Shreyas Iyer in top form. What a sublime innings. Beautiful, beautiful batting.
Well, that's right. That innings spells very, very good times for Indian cricket on the whole, with that young man, shouldering the captaincy and also going ahead and playing a knock like that. But I'll tell you what, I'm a little heartbroken today. I would have liked Mumbai Indians to come out on top. But that's
still bleeding blue, Nigel.
That's the way the game goes. So kudos to Shreyas Iyer. Our team, maybe better luck next time. They put in a good fight. Maybe a catch or two was dropped at the wrong time, but so be it.
Two new teams in the final for the first time.
Indeed. Who are you going with?
It's going to be a good one. I'll watch this game for sure from start to end.
Prashant, you want to choose a winner between the two?
No, I was watching chess, guys.
You guys
brilliant. See the Gukesh essentially taking out Magnus.
Wow.
6 rounds.
Yeah.
And in Norway, outstanding stuff. And I think we've got the... people have been talking about this for some time now, that who's the successor to Vishwanathan Anand. Mm-hmm. I think he's very, very young, but I think Gukesh is the answer.
It's not just the win. It's the manner in which he reacted post the win as well. Just calm, let it soak in. And we saw what the opponent did. I mean, that's the champion in there. But kudos. Indian chess is well moving in the right direction.
Absolutely. And
now markets, are they moving in the right direction?
We'll see. But, let's just take it from the top, right, in terms of what you need to know as we begin another new session. So essentially you had, and this is a theme which we've kind of highlighted now for 2 weeks now, which is that maybe we've seen the peak of good news flow on tariffs. I mean, we've seen the peak, and maybe from here there's going to be a little deterioration. And the last 2 weeks have proven that indeed is the case. Why do I say that? So by the end of last week, news on tariffs, and the graphics will start to come up, has taken a decisively negative turn. Trump accused China of violating the recent Geneva deal, which is, of course, the handshake deal which happened. And it was not a deal. It was basically an agreement to start to talk. China issued a denial that no such thing. Trump then said, I'm sure that I'll speak to President Xi, Chinese President Xi, and hopefully we'll work things out. So this all happened, Friday post-market hours. And let's move this along. Yeah, there you go. I'm sure I'll speak to President Xi and hopefully we'll work things out. Then after that, Trump announced a doubling of tariffs on steel and aluminum to 50%. So this is, again, post-market hours on Friday. Over the weekend, what has happened? EU has threatened countermeasures. China said it would take measures as well. So both these came through, and we'll see what happens. So from here, as we go into the next couple of days, that phone call which Trump has said he's going to have with President Xi was going to be something to track, and details out of it. And of course, if there are before that countermeasures from both EU and China, it'll basically take the tension on tariffs, etc., up a few notches. Markets took the bad news on Friday. By the way, the S&P was down 1% at the lowest point, and then it recovered. So, essentially, we kind of took the bad tariff news flow in its stride. The S&P ended flat. The Nasdaq didn't have very much on it as well. So is the resilience on markets underscoring the power of taco thinking? What is taco thinking? I mean, essentially, I mean, I don't want to say it. That question was posed to the president, and it stands for, it was coined, Trump always chickens out, right? I mean, he'll sort of put something big out and then he'll kind of always walk back. Is that the reason why the markets are thinking, well, this too shall pass? It's possible, and why not? Now, basically that Trump will not follow through on any of his aggressive tariff policies. The S&P 500 And that's the news flow bit of it, right? The S&P 500 closed out May. It was the best May since 1990, with the S&P gaining over 6%. The 10-year yield on Friday was down 2 basis points, nothing very much, 4.4%. The dollar index was unchanged at 99.3. With regards to oil, there is a bit of a move this morning. So OPEC Plus has agreed to another 400,000 barrels per day supply increase. This is in line with expectations. Oil prices, the last I checked, they're on your screen, 2.5% higher after ending flat on Friday, even slightly lower on Friday. As we go forward, U.S. fiscal risks should be in focus. The U.S. Senate will resume discussions to pass the Trump's big, beautiful bill. Many are saying, it will not go through in this in the current form. There will be changes made which will bring down the size of what the bill plans to spend, etc. We'll see. Hopefully it will be that. But in any case, the fiscal risk and what's happening to the long end of the bond curve in the US, I think, comes back into focus. Later this week, towards the end of this week, RBI will meet. They're expected to cut rates by 25 basis points. Of course, on Friday, we also had the GDP numbers, which we will talk more in a bit from now, and the numbers were good. Now, U.S. jobs data is the other thing. That's again on Friday. ISM services and global PMI should also be in focus as we go into the next 4 odd trading sessions or so. Just to tie in the levels here, the Nifty actually it held on last week. The Nifty Bank, actually 2 weeks now, the larger indices have consolidated. Broader markets have continued to do very well. Immediate support right now stands at 24,692, which is the 20-day moving average. Very near term, 60 points away basically from where we left off on Friday. And then the next support is 24,462. On the way up, we need a break, and we've been sort of pulling this level for about 6 days now, 25,116, to confirm that the market is beginning a new impulse higher. For the Nifty Bank, we saw follow-up gains on Friday. The resistance is at 55,695 to 55,875, and support stands at recent lows of 55,096. So that's the picture as far as the broader markets are concerned. The headline indices go as well. GIFT Nifty will give you a quick sense of how we are starting. Once again, like we've seen for many days now, neither here nor there. Maybe we pick a trend as we start trading. 25 points lower on the GIFT Nifty. Surabhi.
Okay, well, GIFT Nifty down 25 points, but Asia is down a lot more. It's a slam dunk across Asian markets as markets realize that this tariff issue is not going away anytime soon. So markets reacting to the fact that steel and aluminum tariffs are all set to be doubled from the 4th of June. And you can see the sharp knock. The Japanese market led the morning lower. It was down about 1.2%. Now Japan's down about 1.5%. And that cut on the Hang Seng is quite bad. Let's just pull that up. 2.5% lower on the Hang Seng. The mainland Chinese market is shut today for the Dragon Boat Festival. So you're not getting rates out of mainland China, but Hang Seng is a good indicator. A lot of other developments as well. There was this Wall Street Journal article that said that Trump will make use of the Trade Act of 1974. This is a piece that we put out last week itself, the options before him. And it seems like he's willing to explore everything on the table. There's that section 122, which allows a baseline tariff of up to 15% to be set for 150 days. And Wall Street Journal is saying that this is definitely, definitely being considered, whether he does it or not, but it's definitely one of the top considerations. Not just that, we had the agencies over the weekend also report, there was a Bloomberg report suggesting that US will look at much wider sanctions in terms of China tech companies. That's another reason the Hang Seng is down big time today. Let's see what more is coming in terms of restrictions on Chinese tech majors. Then we had the White House National Economic Council Director, Kevin Hesset, saying that Trump and Xi could talk as soon as this week. And that's where the hope is, that they'll speak and they'll, break this logjam. Because after Geneva, nothing has progressed and the chatter has been on the negative side. Hesset says, my expectation is that both sides have expressed a willingness to talk and they'll definitely be discussing trade. Let's see. Coming to our market, so we're gearing up for what promises to be a weak start. Let's see if we indeed get, an opening leg down. Now, the Nifty has been consolidating for 12 straight sessions. Right now, we're about 50 basis points higher than the 20-day moving average, which would be perhaps the first challenge on the lower side today. Let's see how this goes. The critical question is whether this trading range of the market, which is 24,450 on the downside and 25,100 on the upside, this broad 500, 550-point trading band, will it break this week or not? Let's see. Let's talk about flows then. Flows are not a problem at all for this market. Whether it's FPIs or DIs, the money's been coming in. On Friday, however, we had a big net sell number. And there's a lot of block deal action as well. So you have to keep that in mind. 6,500 crores of selling by FPIs, domestic institutions ended up buying over 9,000 crores. But overall, FPI buying in May is still looking very good. It's the best we've seen so far this calendar year at close to 20,000 crore rupees. So let's watch for this. By the way, the flows action in the month of May, 50,000 crores of sales have happened. OFS, PE selling, promoters selling. That's skewing the DI and FII number. Coming to the GDP numbers, that's a pleasant surprise. So macros are in our favor. Fourth quarter GDP beating estimates at 7.4%. It's also a nice pickup from the third quarter. Third quarter, we were at 6.4%, of course, lower than last year. And the market will like the fact that gross fixed capital formation has moved along very nicely. It's a big, large jump, 9.4%. on gross fixed capital formation, much higher than last year, higher than the previous quarter as well. Construction growth is looking good at close to 11%. Manufacture is still limping along. It's improved sequentially, but it's still way off from last year's levels. Manufacturing growth of about, just about touching 4.8%. So that's the GDP number. That's the positive. Auto sales are also, there's more positive than negative because the companies that have done well in the last 1 year, they continue to do very well. M&M, TVS Motors. M&M, the PV sales are up 21%. TVS Motors, total sales up 17%. Tata Motors, that's some red. The challenges continue. Sales are down. CVs, PVs, everything's down for Tata Motors. We'll talk about this. And aside of it, last of the earnings season action. So Nykaa is going to be in focus. Nyka's done well. Margins are up almost 100 basis points. Watch for this stock. Apollo Hospitals, we'll talk to the management today as well. Another very steady quarter, in line with estimates for Apollo Hospitals. Reddy's is interesting. Semaglutide. There's all talk about these GLP-1 drugs. And now there's a challenge that's come in. In fact, the Delhi High Court has barred Dr. Reddy's from selling semaglutide here in India because the innovator company has taken Reddy's and the partner to court. Watch for this stock as well. So plenty to keep us excited. Macros, micros, stocks, levels. So much going on.
Well, that's right. On the domestic front, things are looking good. And on Friday, there was an MSCI rejig that took place. That explains why they were selling. Maybe the number's a little bigger than what the MSCI rejig was hoping for. But that's one point to put on the table as well. However, domestically, things are looking good. If you look at the GST collections at around 2 lakh crore, you like that. You look at the GDP print, you like that as well. In terms of earnings in the past quarter, I was looking at what Motilal Oswal was estimating and what they were delivered. Well, that as well was fairly good. So the domestic piece actually is looking quite good. And we're bracing for an RBI rate cut. So put all those factors together on the domestic front, actually, things are looking up. The problem is on the globe because there's uncertainty on Trump's tariffs. It'll be interesting to see whether or not he goes the MAGA way, that's making America great again, or he taco, that is whether he chickens out. And the street will be hoping to see whether or not there is some negotiations out there. But this, this Trump trade tariff problem, that continues to plague the markets a little bit. So we'll have to keep an eye on that. And geopolitical fears as well are back on the table with what we're looking at with regard to Russia as well as Ukraine. For the time being, you have Brent crude prices that are pretty much well behaved, as well as the dollar index is pretty much, in our favor as well. So for the time being, both those two indicators, they're in favor of an emerging market like India. So as I said, domestic piece looking good. The global cues a little bit jittery. One factor that's making me not worry too much on the first day of a new series is that the India VIX cooled off. Yes, we ended lower in Friday's trading session, but when the VIX cools off, that's one comforting sign because otherwise the VIX had moved up a little bit. In today's trading session, we'll keep an eye out on that as well. Moving to what the FIs did, well, they added shorts yet again. They added close to 8,500 short contracts, while the clients, they're doing the opposite. So they added close to 2 longs for every 1 short position. So if you look at the setup as of now, the FI net short positions, well, they have moved to around 80,000 contracts. On the flip side, the clients, they're net long at close to around 60,000 contracts. This is normally an ideal scenario for the markets to move up. But we need some good news. For the time being, the markets are devoid of that good news. So once that good news comes, maybe, in fact, we'll be able to break past that range. The PCR holding at around 0.7, that's towards the lower end of the range because you've seen call writing come back. 24,800 call, 24,900 call. Both of them were fairly active even in Friday's trading session. The good point is the 24,800 put as well continues to see some writing. So quick range out there. Going by the options data for the day, you don't want the 24,550 odd mark to break on the downside, and the resistance mark at around 25,050. So broad 500-point range. For the time being, the market is lacking that positive trigger. I think we spend some more time in this range.
Okay, we're right in the middle of it. So let's see how this week plays out. Well, let's quickly get you the equity call of the morning. Sanjeev Prasad of Kotak Institutional Equity says the Indian market seems to be stuck between the harsh realities of stiff valuations, domestic growth issues and global macroeconomic headwinds, and the hopes of a recovery in the economy and in earnings. He says the fourth quarter of FY25, the results did not provide much comfort about an imminent recovery. He adds that fourth quarter net profit of the Nifty 50 index increased 3.7% and EBITDA was higher by 9.2%.
Okay, well, let's just quickly run you through what's lined up here over the show, the program, for the next 2.5 hours. So we'll be speaking with Matt Orton of Raymond James Investment on the other side. He's right here in our studios. 8:35, we'll hear from Prakash Diwan for some fundamental stock calls. At 9 o'clock, Sachin Salgaonkar of BofA Securities is joining us from the sidelines of the BofA 2025 India Conference on trends in the telecom space. 9:20, Pankaj Tibriwal of Ikagai Asset Managers joins us on markets. 9:30, TVS Motors speaks about the company's growth trajectory in EV manufacturing. Sunita Reddy of Apollo Hospitals will be with us to talk about the numbers which came through. 9:50 a.m. we'll have the management of Mahindra Automotive to talk about the auto sales for the month of May and their outlook going forward. It's the economy. Latha in conversation with CNBC-TV18's Citizens Monetary Policy Committee to discuss what they expect from the RBI later this week. That's the panel.
A lot of stock-specific action to track. Let's run you through our top 10 segment. We're looking at Apollo Hospitals, Vodafone, Nykaa, IRB Infra, and Mazagon Dock. All of them will be reacting to positive news flow. On the flip side, we have Hindalco, Tata Steel, Inox Wind, Dr. Reddy's, and OneSource Specialty Pharma that will be reacting to negative news flow. Let's take that break, come back, get into further detail on all of these names.
Welcome back. So we're gearing up for what promises to be a bit of a challenging start. Asian markets, like we've been telling you, are down, some of them as much as 2.5%. That's the Hang Seng. So what about India in the midst of this global tariff storm? Matt Orton, Chief Market Strategist at Raymond James Investment, is with us in person this morning in the studios. Matt, how good to see you in person.
It's wonderful to see you.
Thank you for coming in. Never a dull moment. So last week we were discussing what are the options on the table, even if the courts try to stall Mr. Donald Trump. And I think he's looking to exercise some of them. So what are you expecting near term? More volatility, but is it still a buy on dips opportunity?
I think so. I'm still quite constructive on where the market goes because we've been able to continually scale this wall of worry. There's been a lot of uncertainty. I'd say this has been one of the most hated rallies that we've had in a very, very long time. And whenever you see a lot of this tariff news come, we know there's going to be tariff uncertainty, but the market is recalibrating to that uncertainty. And when you have a backdrop of really, really strong earnings, good fundamentals, a strong job market in the U.S., and the rest of the world almost bottoming and starting to reaccelerate from an earnings perspective, I think that sets up a really good fundamental backdrop for a rally to continue. So I continue to tell clients, use downside opportunistically, but don't chase the upside because we're going to see a lot of fits and starts to this rally.
Matt, the U.S., what's the view? The consensus still seems to be that maybe money will keep coming out of the U.S. and go into other parts of the world. Would you agree with that? And it's not a sprint, it's a marathon in that sense. What is your reading?
Yeah, Prashant, I think that's a good point. It's definitely not a sprint. And I think where you're most likely to see some recalibration with respect to money coming out of the U.S. is going to be from European institutional investors. So there's been this huge to-do about sell America. And I don't think there's been actually a lot of truth to that. But when you look at European institutional equity investors, they've been very overweight to the U.S. for a long time. And while I don't expect them to sell tremendously from some of their big holdings, the mega cap technology names, I do think there's the possibility for, say, a 1, 2, 3% at the margin change to repatriating those assets back home, especially if some of these tax bills are passed that's tied up in this big, beautiful bill. If that happens and you see that money start to move, that can have a very tangible impact on European equity markets. So that's an area of the world I'm also more constructive on, especially when you overlay that with better fundamentals and a lot more fiscal spending coming from their governments to support stocks.
All right. Hey, Matt, good to have you in the studio, Matt. And you're one of those that I've heard over the last many months who's been very bullish on Indian equities. So where do we stand right now? We have had a good run. I recall when we dipped as well, you said you would be looking to allocate more money. So what do you think? Going by the current valuations, going by the domestic positives that I just highlighted, are you still constructive on Indian equities? And give us a couple of stocks as well. The last time I think you mentioned Jio Financial and Paytm. Anything new?
Yeah, great point, Nigel. I'm still constructive on the Indian markets. I think we might enter more of a consolidation period right now, which is healthy. We've had a 15% rally or so from the bottoms a couple months ago. So that's a really good setup for the markets to maybe take a breather. And as long as you continue to see shallow dips followed by better buying activity, that to me looks attractive. And then you overlay the fundamental picture where you have some of the strongest GDP growth around the rest of the world. That's a really good opportunity with a weaker dollar for money to start moving back into the country. So I have been active on buying some of the dips. My core holdings still remain the same. I still very much like some of the financial names like ICICI Bank, Mahindra on the auto side. But I have been looking more at some of these secular growth trends. How is artificial intelligence being integrated into businesses? How are people leveraging, I'll call it, new consumerism, new trends? Those are global themes that I think are playing out in India. So Paytm is one of those names I like a lot. I think investors think the name's fairly expensive, which it is, but if it can realize some of its growth, I think there's a long runway for further recovery. Some of the names I'm looking at as well, that I'm here for the Bank of America conference, that I'll be talking to management teams, infrastructure names like L&T, that one looks interesting. There's been a strong recovery. I've been enthusiastic about their earnings and CapEx and also where they're seeing investments across the GCC. So I think that can be another area of opportunity. And then also looking on the infrastructure side, like in Adani Ports, that name's had a pretty solid recovery. And when I look at the actual fundamentals, earnings have been ticking up. Some of the acquisitions I would expect to be fairly accretive to their bottom line relatively quickly. So I think there's a lot of room to run there as well. So there's definitely opportunities in Indian equities. Again, same as the U.S., don't chase the upside. Wait for that consolidation because there will be opportunities, and these are good long-term trends guiding these names.
Quite interesting. Matt, also, I mean, this week we have the RBI policy, and the broad expectation is that they'll cut rates, and some people say they could cut up to 75 basis points, 100 basis points over the next 12 months, right? You've already liked large Indian banks in the past. How would you look to play this easing cycle in India?
Yeah, this is where selectivity becomes really important because rates coming down could pressure net interest margins for some of the banks. So when you look at a bank like an ICICI, they not only, I think, have strength with respect to their ability to navigate net interest margins based on their loan books and how their deposits are coming in, but they also have a growing private banking business that is higher margin that can offset perhaps some of the weakness you would have from net interest margins. So I like companies that have, I'll say, that balance of exposure and growth to a burgeoning, I'll call it an investor class in India. That's really, really exciting. And you don't have that in a lot of other markets around the world. So that's how I look at the financial landscape right now.
Still liking the big banks like ICICI?
I do. That and HDFC. Those are two of my favorites right now.
Okay. Well, fantastic, James. Thank you very much. Great conversation with you. And, we hope you have a great stay in India. Come back, with lots of ideas. And, of course, we'll keep chatting you once you're done with your management meeting.
Maybe after you do all the conference rounds, we can have you back to get a sense of,
I'll catch you at the conference itself.
Absolutely. That would be great.
Thank you very much, Matt.
Thank you.
What we'll do is we'll take a quick commercial break here. We're going to come back and, I think we have
Top 10 links,
research team standing by. Go on.
Okay, all right. Well, I'll kickstart the action then today because President Donald Trump has gone ahead and announced that he's going to be increasing the tariffs on aluminum as well as steel, which was at around 25%. He's putting it at around 50%. Remember, when it was 25% itself, it didn't make such a big difference to the domestic steel as well as the aluminum players, though Hindalco could be the one that will be signaling out. Let me explain this to you. If you look at steel, the total amount of imports that are imported into the United States is around 28 million tons. That's gross. The net number will be around 16, 17 million tons approximately. Aluminum is around 5 million tons approximately. Both those two are gross numbers. What's the fear? Direct impact is very, very minimal because there's very minimal amount of steel as well as aluminum that goes from India to the United States. But if you're looking at steel, then one factor that could weigh is that, there could be some kind of supply and some kind of disruption on that front. And the stock I'll be looking at is Tata Steel Netherlands because it sells close to around 700,000 tons. That's close to around 11% of the steel that is produced at Tata Steel Netherlands. In the entire scheme of things, it's very, very small. And some part of the steel that is imported into the United States, as Tata Steel has told us, is not produced in the United States. So we'll have to keep an eye out on that. Hindalco, that's the one that could get hit. The good part is the Midwest premium. It was around $500 per ton. It's moved to around $800 per ton. That could move up. The problem is the raw material comes in from Canada. So we'll have to see whether or not there's an exemption. But as per the last con call, they had said that at around 25%, the hit could be $40 million on a quarterly basis of EBITDA. So since it's going to be around 50%, then the hit will be relatively larger. So Hindalco could be the one that gets hit, as of now. But guys, don't rule out some kind of deal before, this gets implemented. So we'll keep an eye on that. Sentiment negative for metal stocks, and Hindalco could be the one that gets harder hit.
All right, Nigel, well, that's a big story, right? And we'll see how this one goes. Let's talk about Apollo Hospitals, which is the number which came out. And we'll have the management with us as well later. Ekta is here with numbers. Ekta, morning.
Morning. Well, largely an inline set of numbers as the revenue and the margins met estimates. The profit was slightly better. The Q4 occupancy improved to 67% versus 65% year on year. The Q4 GMV for Apollo 24/7 was up 11% to 795 crores. And the 24/7 guidance of break-even is intact, which stands at around Q3, Q4 of FY26. For FY25, the HealthCo and 24/7 margins are 13.1%, but they're expected to rise to 17 to 18% going forward. And for diagnostics going forward, high teen growth in FY26 with 200 to 300 basis points margin expansion expected. So overall, numbers in line and the guidance seems to be quite firm.
All right, Ekta, thanks very much. And that's the conversation coming up. Sunita Reddy of Apollo Hospitals joining us at 9:40 this morning. All right, let's just talk about the next one. Vodafone Idea in focus. Rima is here to tell us why. Rima, morning.
Hi, good morning. Numbers for Vodafone Idea, and it's a muted set. Revenues for Vodafone Idea have declined by 0.9% on a quarter-on-quarter basis, and this compares with about a 1 to 2% growth that peers had. Even losses for the company have widened on a sequential basis and now stand at close to 7,200 crore rupees. The problem is the company continues to lose subscribers. In Q4, the subscriber loss stand at 1.6 million, but for FY25 as a whole, the last 4 quarters, the subscriber loss was in excess of 14 million. The board has also approved a fundraising of about 20,000 crore rupees, which is an extension. They had approved it last year, but they couldn't go ahead and complete the debt fundraising. So that continues. 20,000 crore is what they're raising. Macquarie target price 6.5 rupees per share. JP Morgan neutral. Target price 8 rupees. UBS is more aggressive, and their fair value stands at 12 rupees for Vodafone Idea. But muted set of Q4 numbers, losses widened, and the company continues to lose subscribers.
So existential issues remain around Vodafone Idea. Got it. Rima, thank you very much for that. Let's look at Inox Wind. Vivek is joining in. Vivek, morning. First glance, the numbers look good. You tell us.
That's right. At first glance, especially when you're comparing it on a year-on-year basis in line with its peers, Inox Wind has delivered quite a strong set of numbers. But the one thing that the street will be slightly concerned is the fact that the company has missed its own stated guidance as far as the execution for FY25 is concerned. So that could lead to a bit of tempering of expectations, especially as far as the stock performance is concerned, given the strong outperformance that we've seen. Now, looking at the numbers themselves, the revenue is higher by has more than doubled, almost to 1.5 times on a year-on-year basis. EBITDA again 1.6 times on a year-on-year basis. EBITDA margins expanding 19.9 versus 18.7, and profitability up almost 5 times on a year-on-year basis. The order book on a sequential basis has moderated, but the order book continues to remain quite steady at 3.2 gigawatt. FY25 order inflows were at 1.5 gigawatt versus just around 2.4 gigawatt on a year-on-year basis. FY25 execution was at 705 megawatt. The company had earlier guided the street saying that they should be able to achieve 800 megawatt by the end of FY25. So that's a bit of a dampener as far as Inox Wind is concerned. However, the company has gone ahead and maintained its FY26 as well as FY27 order execution guidance at 1200 megawatt and 2 gigawatt respectively. So that should lead to a little bit of assuaging of concern. But overall, given the strong outperformance, expect some tempering as far as the stock rally is concerned today.
All right, Vivek, thank you very much. And we'll keep an eye. Now, the next one is interesting, and I think will be widely watched in the pharmaceutical space here. Dr. Reddy's and One Source Specialty in focus. Ekta is here to tell us why. Ekta, morning.
Morning. Well, there is a court case, and what has happened because of the court case is now that it's public knowledge that One Source is going to be a supplier for Dr. Reddy's when it comes to semaglutide. But now on to the court case. It's the Delhi High Court has basically restrained Dr. Reddy's and One Source from selling semaglutide in the domestic market. This order is in lieu of a patent infringement suit which was filed against Dr. Reddy's and OneSource by Novo Nordisk, which is basically the patent holder of Wegovy as well as Ozempic. Now, Novo Nordisk alleged that Dr. Reddy's and OneSource are importing large quantities of semaglutide API into India to manufacture and export formulations, and this is basically not allowed by the Indian Patent Act. The court has not, however, barred these Indian companies from manufacturing and exporting the drug. The next hearing is on August 19th. Now, like I mentioned, a couple of key things from this is that OneSource is now a known supplier to Dr. Reddy's. We do understand that OneSource is supplying to 20 plus companies. So though, the news is negative, there's a possibility that the stock could probably be in the green because of the kind of potential and the kind of partners that they have for semaglutide. Dr. Reddy's and OneSource are now still allowed to manufacture and export the drug. So Canada is one of the biggest markets which is going off patent in Jan 2026. So more than the domestic market, the street is probably going to be looking at the potential for the Canadian market, and hence that is going to be that's going to continue in terms of manufacturing. So that could still be a positive.
Okay, all right, got that. Ika, thanks very much. Very interesting developments there. We'll watch out for Dr. Reddy's. Back to some of those last earnings of the season. Manglam's here with Nykaa. Manglam, is it looking pretty?
It is looking pretty. I'll tell you why. Because this is a sector which has been parched for growth, and in that we have a company which is literally glowing, and the pun is unintended out there. A 24% revenue growth that the company has reported at around 2,062 crores on the top line. Margins have increased by about 90 basis points as well. 5.6% has turned to 6.5%, which implies a 43% growth in the EBITDA. And the net profit on a low base of 9 crore has jumped over 120% and is now at around 19 crore itself for the last quarter. What is the segment that did well for them? It's the beauty segment, which led from the front when it came to growth on the revenue, 25% jump in the revenue and 40% jump in the operational performance. The segments that are doing weak for them, fashion, that continues to grow slower than the beauty vertical, and the EBIT losses also increase. So that is a bit of a pain point for Nykaa. Let's see whether the company comes out of that or not. The others, which is their wholesale business, etc., is consistently doing well with a 150% jump in revenue. And because this is a business which is an investment phase, the EBIT losses continued, but they've narrowed considerably as well. So beauty doing extremely well, firing on both the engines. Until that happens, I think the street will like these numbers. The stock is down 15% from its 52-week high. So see some green on Nykaa today.
All right, Mangalam, thanks very much for that. Now, IRB Infra is the next one we're going to focus on. Vivek is here with numbers. Vivek, morning.
That's right. Good morning. So two stocks on the radar. The first one is IRB Infra, which houses the private InvIT of the group. And the second one is the listed IRB Infrastructure InvIT, which is a publicly listed InvIT platform. Now, what is the development that's transpired over the weekend? IRB Infrastructure Trust, part of IRB Infra, has gone ahead and signed a binding term sheet to sell 3 highway assets, and this is to the Public Infrastructure Trust. The enterprise value for this particular deal has been pegged at 8,450 crore rupees. The equity value of the deal is at close to 4,905 crore rupees. The 3 highway assets are Hapur Moradabad, one in Rajasthan, and the other one at Gulabra. And the assets comprise of a total of 1,800 lane kilometers. So what is it that IRB is saying? How will they utilize the proceeds that they will receive from the public InvIT? The sale proceeds of a little over 4,900 crores will be redeployed towards asset addition of 15,000 crore. Now, just looking at the valuations of the deal, the gross toll revenue in FY25 for these 3 assets was at close to 690 crore. And remember, the remaining life for all of these assets is at 19 years. So the transaction works out to an EV to gross toll revenue, if you're looking at it on an FY25 basis, at 12.3 times, in line with most of the deals that take place in this particular space. The transaction increases the life of IRB InvIT, the publicly listed transform, which currently just had 12 years of remaining life. So that visibility increases. On the other hand, IRB Infra benefits from growth capital that it receives from this particular asset sale.
All right, got it. So we'll keep it on the radar. Vivek, thank you very much for that. Let's now go to RIA to understand what Mazgaon Dock said in its conference call. Remember, the stock was hit hard. It was down 10% after numbers on Friday. RIA morning. So what's the takeaway from the conference call?
Good morning, Surbhi. So let's take a look at what they've said in the conference call on Friday. First up, they've said that the margins in Q4 were impacted because of higher provisions undertaken for two major projects, which had a total order value of around rupees 3,500 crores. Now, going ahead, they are going to reassess these provisions each quarter, and they will either reverse these provisions or possibly increase these provisions going ahead. Coming to the outlook for FY26, the PBT margin guidance stands at around 15% for FY26, and they're also expecting an 8 to 10% revenue growth, which is subdued compared to the 20% growth that we've seen in this year. Coming to the orders, though, here's where the commentary is very strong. They're expecting these P-75 additional submarines and P-75I submarine contracts to be signed in FY26 itself, and provided both of these contracts come in this year, the order book will reach more than rupees 1.25 lakh crores compared to just about rupees 32,000 crores that we've seen in this year. So the order book will possibly go up by around 3.8 times in this year. So expecting some recovery on the stock based on this.
All right. Thank you very much for that, Ria. Well, let's just quickly recap the top 10 stocks here. So stuff on the positive side are Apollo Hospitals, Vodafone Idea, Nykaa, IRB Infra, and Mazgaon Dock, Shipbuilders. Well, stocks with some negative red tinge are Hindalco, Tata Steel, Inox Wind, Dr. Reddy's Laboratories, and OneSource Specialty Pharma. Let's talk about the commodity pack as well. So from a stock market perspective, I think Nigel highlighted what's happening with these tariff threats. But underlying base metals, what's happening? What's top of mind? Manisha, morning.
Morning, and thank you for that, Prashant. Well, I'll start with the metals itself. And we've seen a smart rebound come in for the copper prices, not so much for the other metals, but copper and steel, which the markets are looking at right now, clearly have seen some gains continuing into the markets right now. Apart from that, it is the crude oil prices after 2 weeks of decline. Today started with almost a couple of percentage points of gains come in here. The markets are reacting to the OPEC and allies meeting, which was on Saturday, where they have decided to increase production by 411,000 barrels per day in the month of July. It is slightly on the higher side, but it is as per what the street was anticipating. So there were no surprises there, is what has led to that rally come in for the markets there. Same is the case for the precious metal prices also, where we are trading with gains right now. Last week wasn't so great. We saw gold prices go down by 2%. Silver was down 2.5% as well. But for the month of May, both the precious metals have been on the positive side. There is now renewed uncertainty on U.S.-China trade policy. The Federal Appeals Court also has temporarily reinstated Trump tariffs. So all of this seems to be aiding buying in many of these tangible commodities. So a start to a very strong day, by the way. So whether it's energy, precious metals, base metals, all of that trading in the positive.
Okay, all right. Got it, Manisha. Thank you very much for that. So commodities on our radar. We need to take a quick break at this point. We'll come back on the other side. We'll, of course, get down to fundamental stock ideas, some, unique names to focus on today. Prakash Diwan will be with us. And, of course, talk about the good macro cues we've got from the Q4 GDP print.
Okay, welcome back. I think we're going to start slightly lower, neither here nor there. But there's good news, and the good news came Friday evening. India's GDP, fourth quarter GDP, came in higher than expected, 7.4%. The full year GDP is coming in at 6.5% versus CNBC-TV18 poll of 6.3%. The stronger number has led the market to worry that the RBI may cut rates by only 50 basis points compared to 75 basis points is expected by the market. Well, there's always that. Lata is here with the fine print of the numbers. Lata, morning.
Morning. Well, first up, yes, the expectation for Q4 was 6.85. It came in at 7.4. Full year expectation 6.3, whereas it's come at 6.5. So all that's very good. But you really shouldn't be looking at GDP because there is a huge indirect taxes component, indirect taxes minus subsidies. So that distorts the picture. If you look at the GVA, that also is very good. So even if you, net out the indirect taxes, the expectation was 6.5% for the fourth quarter, and we've done 6.8. So that still looks like a very good number. And within that, the internals, agriculture, construction, all these things, items that have done well are also employment-heavy sectors. So exports again. So it looks like, a larger number of people benefited from the growth number as well. CapEx, as you all pointed out, at 9.4% in Q4 is positive. But looking at all this as well, there are still some signs of weakness. See, consumption has grown only 6% in the fourth quarter and 6% in the full year. It's not even in pace with the overall GDP growth, which is why FMCG companies have been complaining that urban consumption is stagnating, and there is no reason to believe that, the Q4 numbers will change their mind. Again, private capex is under pressure. That big capex number is because government invested hugely in March. The March government capex number was so large that has pushed up the number. It's not a private capex effort. And as you go forward into FY26, there is tariff uncertainty, which will mean no CEO will really want to put money when you're not sure whether you will be able to export, how cheap will be the imports. So all that is a problem. Capex, again, could take a little bit of a hit because the fiscal spend is going to go down because the deficit has to come down. So if you keep all this, the FY26 picture is still subdued, which is why I have not got a single economist report who has upped the FY26 number because of the strong FY25 number. I'm just running the numbers for you. Look at that. Goldman Sachs 6.2, Kotak 6.2, ISEC PD 6.3, MK is only 6%, and SBI has a larger range of 6.3 to 6.5. But as you can see, all of them are expecting a softer FY26 compared to FY25, even with that surprise. So I think the Reserve Bank call is not over. Although the market on Friday pushed up yields, fearing that the end repo rate will not be 5.25 but 5.5, I think there are people who will still tell you that no, 5.25 is still possible.
And this Friday, at least 25 bips.
This Friday is 25. There's only one person in our vote, SBI, who said 50 for even this. But the majority is going with 25. And that, I think, is consensus.
Okay. All right. So let the rate cuts continue. I think that's the call. Thank you so much for that, Lata. Good to get that understanding of the GDP data. Let's quickly move on and welcome our fundamental guest on the show today. Prakash Diwan is joining in. Prakash, good morning and happy Monday to you. Lots to discuss. Auto sales, last of the earnings, the good tailwinds from the GDP number. Actually, let me start with some of the earnings. Let me take up Nykaa with you because Nykaa's numbers look good finally. Do you think there's appetite for these new age platform companies? How do you find Nykaa at current valuations?
Good morning, Shubhi. So, no, I think there's this very clear turnaround in terms of path to profitability and the approach to the business itself. For most of these companies having done enough mistakes, vis-a-vis what the street expectation is. But is Nykaa part of that list in terms of turning around? I think it still needs more time. If you really see what's any of these new age companies where opportunity exists from a defined trajectory on this turnaround, why not a Zomato? Why not a Paytm? These are companies which very clearly have demonstrated that the change is irreversible. Nykaa still needs to the same thing happened with Mama the other day. You had good numbers, but you couldn't sustain. So that's the whole challenge. They'll have to actually establish the trajectory unequivocally, and then probably the market will start wanting to put something. I mean, things have improved, margins have improved, but then they still need to relook at the business model. Why, carry the burden of fashion when it's not doing well for so many quarters? So there are lots of questions that they probably have answers to, but we'll get to see that on the ground and then look at it. But not too excited to buy into it at this point in time.
No, absolutely. Got that. By the way, Prakash, quickly, if you can run us through this. If you've seen the news flow, Ekta highlighted that Dr. Reddy's and OneSource around semaglutide.
Yeah.
That case. Any thoughts there?
No, I think OneSource has been a developing story, if I may use one of your terms, in that sense that it always held a lot of promise, given how it started off and branched off and on the market as well, the way it's been creating its trailblazing kind of moves. I think this verdict actually establishes a lot of things, keeps everything, all the doubts away. And semaglutide as an opportunity is something whichever way companies participate is going to be promising enough. So I don't think these restrictions will not allow them to export. And there's a massive market overseas which they still have accessible. So I am quite positive on that. OneSource Specialty also has other things than this that are very positive. So take a look at it from a constructive two-year perspective. It could definitely surprise the market.
Okay, so that's on Dr. Reddy's. Prashant, just hang on for a second. Need to run through the auto sales, the numbers that we have so far. Then we'll ask you for your take. We have Sudarshan joining in, and the leaders continue their good form. That's the story so far. Mahindra and Mahindra, TVS, again, good numbers coming in, but Sud has all the details. Over to you, Sud.
We still have few companies to report auto sales for the month of May, but companies which have already reported sales, and for them sales are looking largely better than estimates, starting with M&M. Both auto and tractor segments have reported sales better than estimate. Total sales for auto segment were up 17%. SUV sales were up almost 21%. And as far as tractor segment is concerned, here total sales have increased by 10%. Also, companies saying that considering early advancement of monsoon, sales for coming months also are going to be healthy. Coming to Tata Motors, it continues to underperform the peers. Even for the month of May, sales were below estimates. Here, total sales have declined 9%. Domestic sales have slipped 10%. Also, PV sales have fallen 11%. And even CV sales were down almost 5%. Coming to two-wheeler companies, two companies that have been outperforming for the last few months. And even in the month of May, these two companies, TVS Motor and Eicher Motors, have outperformed. So first, talking about TVS Motor, here healthy trend continues. All the segments have registered growth of more than 14%. Total sales were up 17%. Two-wheeler sales have increased by 16%. Even export sales were up 22%. And EV sales were up 50% year-on-year. But for EV sales, companies saying that considering the disruption in the supply of rare earth magnet in near to medium term, EV sales can be impacted. Coming to Eicher Motors, again, here also sales were better than estimate. Royal Enfield total sales were up 26%. And sales for engine capacity up to 350cc. Here sales were up 28%, and above 350cc capacity sales were up 16%. Good part for Eicher Motors is contribution of export has been increasing for the last few months, and even in the month of May, export sales were up almost 82%. One company that has been underperforming is Hero MotoCorp, and even in the month of May, sales for Hero MotoCorp were below estimates. It has seen low single-digit growth for all the segments. Total sales were up 2%. Motorcycle sales have increased 1%. Domestic sales were up 2%, while export sales were flat. So, barring Hero Moto and Tata Motors, all the companies which have reported auto sales for the month of May so far have been better than estimates.
All right, got that. Sudarshan, thanks very much for a neat wrap-up of all the numbers that we've seen so far. Prakash, so open-ended question. I mean, do you see any turnaround stories here, maybe in the PV space beyond Mahindra and Mahindra from a stock buying perspective, beyond M&M, anything else you're looking at?
So, the PV space is anyways very small, given the kind of option that you have. But I would believe Tata Motors, while the numbers have not been very encouraging, could probably see a turnaround because their strategy is to bunch up some of the models that they're launching, the EV launches, and the Harrier is on the anvil. It is likely to kind of, open up a very different segment, better price point, better margins. So things could probably look up, Sudhir, for them as well. Whether you would buy the stock would also depend on a lot of the global cues, which they are more subjected to. But play safe, M&M still has its salience that's unveiling itself. I don't see why, that would not kind of deliver the goods. So it's a bet that you would need to kind of look at ancillaries from what numbers are telling you. The next 6 months are going to be very positive for ancillaries. So we'll discuss it at some point. But to answer your question, not buying anything afresh beyond M&M, but I would look at ancillaries very actively in some time.
Give us a name, since you're saying the auto ancillary space. One or two names?
Yeah, so there are lots of them which are positive. But look at a small company like Suprajit. There's something like Talbros. Even a large one like Samvardhana, the other day, the management was on the channel talking about the plans and, things look quite positive. So the reason is different, of course, because it's a global shift that's likely to happen where ancillaries are not as badly impacted as what we thought earlier when the tariff war started. So, things could start kind of reviving themselves and the sales generally by and large for most of these companies, the OEMs, have been fairly better than what most people penciled in for FY25 also.
Sure. All right, got that. We'll need to take a very quick break, Prakash. Just bear with us. Take that break, come back, and then technicals as well. Very, very important trading calls coming up with Darshan Sukhani and Mitesh Thakkar in just a bit.
Welcome back. 8 minutes to go for the pre-open session to kick off. We're down about 40 points. Let's get a technical setup going with Sudarshan and Mitesh, who are with us with a sense of what you need to do. Gentlemen, good morning. Great to have both of you here. Mitesh, how are things looking? How are we set up? I mean, last 2 weeks, large cap indices have been consolidating. Broader markets have moved on.
Morning, Prashant. I think, I've been calling for consolidation given the fact that a lot of indicators have turned sideways after that big rally. And therefore, last 1.5 2 weeks, the market has, not done much, but been in a range. I think that might continue. What could be the first signal on the upside is the bank nifty, sustaining above 55, 600, 700 zone this week. I think could suggest that the banks could see a breakout and therefore some kind of positive bias over there. If that happens, then the nifty will also be positively biased. But that is something which we'll know in a day or two. But yeah, above 55, 600, 700 zones, if we can sustain for a day or more, I think then we are looking at 56,400, 500 in the bank nifty. But on the nifty, I think it still looks like a range of about 500-600 points, starting from 25,050 to about 24,550.
Okay, all right. Got that, Mitesh. Sudarshan, morning. Let's get your sense as well. Market's been consolidating. Index hasn't done anything. Do you expect that to change? And do you have a trade either on the Nifty or the Bank Nifty?
Yeah, good morning. See, the index has been moving in a trading range, so it has actually done something. It is telling us that there is no view. Marketmen do not have a view on the index as of now, and that is what we have to understand and follow. It's a wide range, 500 points. So it is not as if you can expect an imminent breakout. Now, anything could happen. But I don't think today is the day when we see a breakout in either direction. That means the Nifty is not giving us a sense of direction. It is moving inside a range where it does not know which way to go. That's a difficult day to trade. That's a difficult period to trade. So the only trade is, because we have seen some rallies, if we see a dip towards the lower end of the range, let's say 24,500 to 24,600, then it's worth buying with a tight stop under 24,500. But that's a big if it comes there, and then we can buy and then keep a stop loss. If it doesn't, I think we should just step aside. That applies to the Bank Nifty. The Bank Nifty has been outperforming, but I do not think it will go away from the index. So for both indices, the trade today is best not to do anything.
Okay, don't do anything. That's the best trade. Got that. Let's also discuss stocks, gentlemen. Mitesh, morning to you as well. What about the stock list today?
Yeah. So I have a mix of buys and sells today. Good morning, Survi. On the buying side is Bank of India with a stop at 119.75, look for targets of 127.5, and Glenmark had some kind of a big move. So buy here with a stop at 1435 for a target of 1500. On the sell side is Asian Paints. Keep a stop about 2280, look for targets of 2220. And NTPC is a sell with a stop at 338 for targets of 325.
Okay. And Sudarshan, what about stocks for you?
Well, I still have an all-buy list because there are mid-caps and small caps and even some large caps which are doing all the right things on the chart. So maybe the Nifty correction, the pause we are seeing in the Nifty could only be a correction rather than another decline. That's because of the stocks. State Bank is a buy with a stop under 797. Pidilite Industries is a buy with a stop under 3062. I also have Glenmark, as Mitesh had. It's a buying opportunity with a stop under 1432. And finally, Berger Paints is a buy with a stop under 556. So stocks are mainly for buying.
Okay, stocks are mainly for buying. We'll take a quick commercial break now. I think there's 4 minutes to go for the pre-open session. Sudarshan and Mitesh, thank you very much. We'll speak again in about 10-15 minutes' time. We'll take a quick commercial break here. We're going to come back with the pre-opening rates. We'll also have Sachin Salgaonkar of BofA Securities from the sidelines of their India conference on what his ideas are as far as the telecom space is concerned. Nigel is at the conference and he'll take that conversation forward. We're back in just a bit.
Welcome back. 15 minutes to go, and we are looking at what potentially is going to be a bit of a gap down morning. Just checking the Asian indices again. Let's actually look at that picture, because the last time we checked, some of those regional indices were down quite a bit, and they still are. I mean, the Japanese market is down 1.5%. The Hong Kong market is down about 2.5%. Remember, mainland China is not trading, so that's shouldn't be looking at those rates. They are shut. That's the picture, and we are preparing for a gap down. Actually, on these tariffs, Prakash, Nigel was just telling us before he left for the conference that, Hindalco perhaps could be even harder hit because of Novelis and what happens with operations there. And then, there's Tata Steel. Directly, India doesn't export too much to the US, but there could be second-order impact. And these metal stocks were doing quite well, actually, last week, because the global-facing sectors had a sigh of relief. What would you do with metals?
I think that becomes an opportunity to buy. I mean, see, these tariffs do come with a little bit of indication that there's no sense of permanence. They're just negotiating tactics. They're more work in progress. My sense is Hindalco will get impacted, because out of the aluminium producers, that's the only one that does have some sort of an export, and they've indicated about a 40 million kind of a hit. But then, in the larger scheme of things, there's enough demand for aluminium domestically and in other markets, other pockets. I don't see any reason why that would upset things for a longer term perspective. So there'll be a blip, but that's an opportunity to buy, in my view. Hindalco is absolutely very strongly poised for so many other factors, and we've discussed this in the past. So I'm quite positive on that. But this becomes an opportunity to buy for long-term investors.
Okay. All right. I'll watch for that. By the way, Prakash, there are two listings today as well.
Yes.
Leela Hotels and AG's Vopak. Both interesting businesses. Did you like any of these issues?
I think AG's Vopak is interesting. It's a nice small business in a niche which is not easy to kind of see many players come into. My sense is, given where we are in the global, setup on exports and the way things are looking up for us as an economy, that's a place to be. But Leela, of course, not taking away the fact that it's a great franchise, but you have many more choices out there, as you would know, even within the listed space. In fact, I was quite surprised when I was studying Leela. In the listed hospitality sector, there are more than about 18 companies to choose from. So that's quite interesting. But I'm not a big IPO fan, so I always like price discovery to be more established, more mature before buying anything from a longer term perspective. I'm no hurry to buy anything that you would have to kind of do it on day one. But I'll wait for the listing to happen.
Okay. All right. Got it. Thanks very much for that. Well, as promised, now let's head across to the Bank of America Securities India conference. We have Nigel on ground there, and I think he has with him the firm's APAC region senior analyst for telecom, media and internet, Sachin Salgaonkar. This promises to be a very interesting conversation. Nigel, take it away.
Well, that's right. Thanks a lot for that. I am here at the BofA Securities Conference. And as you said, I have the one and only Sachin Salgaonkar with us. Hi, Sachin. Good morning. Good to have you on the show. And all the best for the conference. Let's focus on three aspects out here. We'll focus on telecom. Then we could maybe touch upon how you see quick commerce pan out. And also basically travel. Let's start with telecom first up. The smallest player among the three, they believe that the prospects are improving. However, the government has been clear with regard to their stance on the AGR dues, as the Supreme Court has been clear. What is your view with regard to how do you see things panning out? Will it be a duopoly market, or do you believe all three players will continue to survive in this market?
Thanks so much, Nigel. In terms of your first question on telecom, look, we do see a scenario where three telcos do exist.
Okay.
For a simple reason that it's very difficult for a telco to go down. Generally see most of the markets in the world, third telco, even with a lower market share, continues to survive. That's because consumers are a bit lethargic. They don't leave the telco. And plus, at some level, there is an indirect help which is coming from the government to the sector, where it doesn't want the sector to turn into a duopoly. Simple reason for that, if a sector turns into duopoly, then at one level, the two telcos may not be able to handle the load of all the 200 odd million users who are, let's say, with the third operator.
Yeah.
And that leads to a cascading infrastructure failure in India. Now, the derivative effect of that is UPI, right? We all know UPI in India literally is working on mobile. Yeah. So if the telco infrastructure crumbles, then it has a negative impact per se out there. So that's why we are optimistic that India will continue to remain more like a 3 telco player market. The fundamentals of the sector are good. You should see tariff hikes happening out there. And on the back of it, you do see cash flows for the sector improving.
All right. So let's touch upon then the tariff hikes. What kind of ARPU increases are you working with for FY26 and FY27? If you could quantify it.
Yeah. Let's, before answering that, look at how tariff hikes have happened in the past. In the past 6 years, there were maybe 3 tariff hikes, and tariff hikes don't happen every year.
Yes.
So it's not correct to assume that tariff hike is going to happen in this fiscal. We are working with the assumption that tariff hike is going to happen next fiscal, not this fiscal. Having said that, the ARPUs will continue to increase for 2 reasons. Number one, clearly there is a base effect which is moved up. And for some operators who have consumers not on a 30-day pack, but on a 6-month or a 12-year or more like a 12-month pack, you do see the benefit of the last tariff hike is yet to fully come into the numbers. So that should lead to an ARPU improvement. Second, this entire natural upgrade in terms of prepaid move into postpaid or feature phone move into smartphone also adds more like 2 to 3 rupees per quarter, which is roughly 12 rupees. Combination of that, we should see more like a 12% increase this year. And with a tariff hike increase, we should see more like that going to in the range of 18 to 20% next year. Now, another point I want to also flag is look at the magnitude of tariff hike. There's a bit of a base effect. First tariff hike, 40%. Next tariff hike, 25%. Last tariff hike, 15%. So generally, one should assume that the next round of tariff hike may be 15% or lower than 15%.
Got it. All right. So low teens in the coming year and then high teens in the following year in terms of an ARPU increase. Got that. Let's focus on the tower business as well. If you're going to have 3 players, what are the prospects of the listed player, Indus Stars? How do you see things panning out? It's got very high institutional ownership out there. So your take, valuation-wise, if I look at it, the company that's listed here, Indus Stars, in comparison to the globe, well, valuations look pretty okay. The problem is, in terms of the clientele, in terms of how do you see things pan out? Your take.
So I think there are 3 specific things one need to look from a valuation perspective. Number one, number of telcos, number of tower operators in the market. India is a unique case where there are 3 telcos and 3 tower operators. So clearly that means your tenancies are not going to improve in a meaningful manner. That gets reflected into lower multiples. Number 2, I would say the ownership structure in terms of the tower company you're talking about, and look at the example of what is happening in China also. When the biggest shareholder is also the biggest customer, the market gives a lower multiple to these kind of companies. So versus a global average of 20 times, you do see India tower companies trading in the range of maybe 5 to 6 times. In fact, India is the only unique market in the world where a tower company trades at a sort of a discount to telco. And the third point is where we are in terms of cycle, in terms of capex. So clearly 5G capex, a large part of it is done for India. 6G is some years away. So you don't see that capex upcycle also, and hence from an incremental growth perspective for a tower company, you should not see a strong kind of a growth out there. And also one could assume that the growth slows down going ahead for a simple reason. In the world of 5G, you don't need the traditional ground-based or rooftop towers. You actually need small cells. And small cells are the ones which are not rolled by tower companies, but by telcos. So that kind of a growth is not what a tower companies will capture.
Okay, all right. So you believe that the multiple that it's getting is justifiable in terms of a discount to the global peers. Got that. Let's move to quick commerce then. The competitive intensity, that's something we keep hearing. How do you think our players, are, the listed players are doing currently? And what kind of competitive intensity do you believe? Is it a real threat to the incumbents?
Yeah. First of all, India is one of the unique markets in the world where quick commerce is picked up. And obviously, when you see quick commerce picking up also in terms of unit economics, clearly it encourages competition. So what was a 3-platform market is now turned into 7-platform market. The e-commerce companies, the traditional retail companies are also sort of, entering into the space. And Nigel, it's very logical to assume that, hey, if I'm incumbent, and the way to find an incumbent platform is to come into that area and give discounts. So as in how you see each platform coming and launching service in a particular area, the only weapon they have is discounts. And as an incumbent operator, if I don't want to lose users, I'll also respond in terms of giving discounts. So on the back of it, you do see a phase of a slightly high competitive intensity. When should it normalize? Honestly, no one knows, but our guess is it should be in less than 12 months for two reasons. Number one, most of the players in the space are listed, so you are answerable to your shareholders. So as a result of which, you can't make investments where you don't see ROI from that perspective. And second, more importantly, at some level, people will realize that, hey, where they are gaining traction, where they are not gaining traction. And basis that, they'll take a call where you want to sort of, double click and where you want to pull out of.
Yeah.
So on the back of it, you do see a natural consolidation playing out. We saw it in different sectors also. We saw in food delivery, we saw in the ride hailing, even telcos. So clearly at some level, and higher the competitive intensity, the faster the consolidation, or at some level, less number of players in the sector.
All right, very quickly then, we have just done with the earnings season. Lot of travel theme is what we heard out. And we spoke to Mr. Puneet Chatwal of Indian Hotels and other hotel companies. They are sounding gung-ho about the way ahead. You track a couple of them. I think Make My Trip is one of them that you track. What do you think about the current travel cycle? That revenge travel seems to have played out post-COVID.
Correct.
But how much more of a pathway do we have ahead?
A great question. I think a simple way to think about it is this is where we consider a theme coming out of India. India is at a point where China was 6 to 7 years back, wherein the Indian consumer is getting richer. She's been encouraged to travel internationally by multiple countries giving a sort of a visa on arrival. And you have multiple low-cost carriers which is connecting India to multiple destinations. So consumer is looking back and saying that, hey, why should I go to Goa when it's cheaper to travel to a Vietnam or, to that matter, Thailand and so on and so forth. And this is an Instagram culture, right? So we want to travel and we want to post pictures on Instagram. So clearly on the back of it, and especially the Gen Zs and millennials are the ones which are sort of traveling.
Yeah.
In fact, an easy stat is what an Indian consumer family was doing before COVID was more like 1 trip a year. Now that 1 trip a year has been turned into 2.5 trips in a year, where 1 trip is more like a short haul and 1.5 trip is a long haul. And we have OTAs which are telling us that the Gen Zs and millennials are even traveling 6 times or 7 times in a year. So definitely travel as a theme is here to stay. In fact, two simple points also to flag. While we are seeing consumption slowdown across the board, travel is one area where you're not seeing a consumption slowdown. And second is a data point which is coming from China, where in China, which was going through a slowdown phase last year, everything slowed down except travel. Because people want an escape from reality. So people want to travel. So on the basis of it, we remain positive in China. This entire so-called international travel theme continued for 7 years. We are also optimistic that in India, it will continue for 5 to 6 years.
Well, Sachin, great conversation. Thanks a lot for speaking to us here on CNBC TV18. I'm a little worried because ARPUs are going to go up. You're saying that, at least 2.5 travel plans in a year, at least 2.5. So it's going to be on us. But great hearing your thoughts.
Sure, Nigel, you can afford it. So thanks. Great having you.
Thanks a lot for joining in. Well, guys, that's it from Sachin. He's given us his views on the telecom space, the quick commerce theme, as well as he believes there's a good runway with regard to travel as well. Back to you guys in the studio.
Thank you for that, Nigel. And very interesting. He believes that the telecom market is not going to turn into a duopoly in India. It will remain a 3-player market. So let's see what happens on that front. Interesting conversation. Thank you very much for that. Quickly, just checking where the market is after the pre-open. So 81 points down. That's where the pre-open has settled. In step with the kind of weakness we're seeing across Asia. Let's quickly go back to our technical experts for some idea. Sudarshan, what's the 9-10 call?
Well, it's Berger Paints. Buy Berger Paints with a stop under 556.
Okay, and Mitesh?
I'll go with the sell on Asian Paints for targets of 22.20.
Okay, all right, gentlemen, thank you very much for that. Let's also revisit some stocks that are going to be on our radar today. Nykaa is definitely one of them on the back of the numbers that came through. Mangalam, let's quickly recap how the performance was.
Performance, 23.5% growth in the revenues. That implies about 2,061 crores is what the company has reported for the fourth quarter in terms of a top line. EBITDA grows 43%. That implies margin improvement of nearly 100 basis points. And the net profit on a low base increase from 9 crores all the way up to 19 crores. So that's a 110% jump out there as well. The business was led, as the company had guided in their fourth quarter update, by their beauty business, where a revenue jump of 25% led to an EBIT jump of 40%, and all of that has powered the overall business. Fashion, which was supposed to grow faster, over the last few quarters has continued to grow slower, and that continues this time around as well. 10% growth in the fashion vertical, with EBIT losses expanding from 29 crores to close to 36 crores. The other businesses, that is wholesale, B2B wholesale and Superstore, all of that continues to do well. But remember, that's on a low base. And secondly, it is still in an investment phase, so makes EBITDA losses. Beauty business firing on both engines. The stock 15% away from its 52-week high. See some green in Nykaa today.
Well, Nykaa in focus, and I think the market's in focus as well. 80 lower on the Nifty is what you have. The sensex is down about 236 odd points. So just about starting, we'll get the big prices, the headline prices, and then we'll go into individual names, individual stocks, etc. So about 1/3% lower on the Nifty, 24,667. The Nifty Bank is down about 0.19, 55,642. The sensex is down about 1/3. And the small cap index, the small and the mid cap indices, by the way, were up 1.25% and 1.5% respectively last week, Friday to Friday, even as large cap indices were flat. So that's the part of the market to focus on. Small cap index is flattish, nothing on it, and I think the mid cap index will come up on your screens, which will show you where we are at. The mid cap index is down about 100 points, 0.2% lower. So 24,633 is where the Nifty is starting out at. The heat map, the Nifty heat map up on your screen, about 25 odd names are higher. Everything else is starting the day in the red. Surabhi.
Okay, so 120 down on the Nifty, and right now the mid-cap index is fighting back hard to try and at least remain flat. Best case. Let's look at the large-cap losers. Apollo Hospitals actually is doing very well on the back of earnings, and remember, we'll be talking to the management in just a bit from now. Lever, Tata Consumer, these are some of the other names that are finding traction. Little bit of a green on Eicher Motors, about $20 higher on Eicher Motors, but then it fizzles out. Let's look at the weakness. It's metals all the way. Those steel and aluminum tariffs going up to 50%. Hindalco is down 1.5%. Tata Steel, JSW Steel. Remember, these companies don't export a lot of metal to the US. But then the second order impact, trade disruption, demand disruption, that's all weighing on sentiment. Tech is also weak. Infosys, HCL Tech, Tech Mahindra, all these stocks are down. Tata Motors is down. It's been another weak month for the company. Sales are down for their CV business as well as their passenger vehicle business. What else? Bajaj Finance, Jio Financial, L&T, Maruti, everything is lower actually. And the banks are not much of a comfort right now. HDFC Bank is about 1% lower. ICICI Bank is down about 0.3%. And State Bank of India is very flat, 0.2% lower. So let's see. Those are the early trends for the time being. By the way, since we're talking about some of the stocks in focus, Mazgaon Dock, remember there was a conference call. I don't think it's entirely helped matters. Stock is again starting 2% lower. Market not entirely convinced. There were some more names. Nykaa, we were just discussing. The numbers were good, but the market's mood is off today. So 2.5% lower on Nykaa. TVS Motors, good sales numbers, but the stock is quiet this morning. This is after the May sales numbers. Inox Wind is reacting well to the P&L update came in the fourth quarter performance. Those are the early trends, but Prashant, unlike most of last week, I mean, this morning we're seeing some pressure even on the mid-cap index, at the index level, that is.
No, absolutely. And we'll see. When we had weeks of outperformance, right, Surabhi? So I think at that margin, there is that as well. By the way, the Nifty support is 24,692, which we put out. That is the first one. That is a 20-day moving average. That is gone straight away. The next one is 24,462. That is nothing but the low that we saw on the 22nd of May, the swing low, and then the market bounced very sharply from there. That is still some distance away. That's about 100. So, 100 gone to the 20-day moving average gone, and then, 100 more to go for the swing low support, which is 24,462 at this point in time. The Nifty Bank will also come up about 0.4% lower. That's 250 points in terms of a cut. Here, the support stands at 55,096. So we are about 0.75 odd percent away, 0.8% away in terms of the first support for the Nifty. We've kind of stretched and moved, and especially the broader market done very, very well. So must remember that. Niva Bupa, I'm not sure if we highlighted. Niva Bupa is the #1 volume-led loser right now. It's a 11-12% cut on it. 77 million shares, and I think, of course, there's that block which has gone through. Emphasis is down about 5%. Emphasis 24.32 or so on that one. Swan Energy is down about 4%. Zentech, big move of 2.5% lower. There is Indocount Industries, which is coming up with a 12% cut this morning. Again, doesn't come up with volumes at all early on, but it is today, and that's why I'm mentioning it. It's got over 500,000 shares already traded. And a name like Nibe, which is, of course, it's had a one-way move over the years, but Nibe is now down 5%. I think they tied up with an Israeli company in defense, basically. So that's something else which is coming up right now. All right, we'll... sorry, Surbhi.
No, I just wanted to add that in a market which is otherwise down, almost 200 down on the Nifty, the one trend that's building is some sort of a move towards FMCG after a long time. I think this is also anticipation. There's a lot of chatter about maybe finally sales volumes picking up. Look at Britannia, look at Godrej Consumer.
Yeah.
These are the stocks. So consumer is a very... Look at Lever itself, up about 1.5%. So in a weak market, Tata Consumer, Nestle, FMCG is the only green flag for the morning.
Yeah, absolutely. Let's welcome in Pankaj Tibrewal, who is now with us, founder and chief investment officer at Ikagai Asset Managers. Pankaj, good to have you with us here. Good morning. Thanks very much. You've, of course, you turned constructive. The market has become quite constructive as well since then. Where are you at now, Pankaj, in terms of your thinking? If you can get kind of quickly start with that, the context, and then we can get down to what you like, places like Auto Anks, etc., which you've spoken about in the past as well. Go on, Pankaj.
Good morning, Prashant. I think the fourth quarter result season just got over, and it's very important to see that we exited on a decent note. And fourth quarter was one of the best quarters in the last year. And clearly, if you look at the top 500 companies, the reported numbers was 14% earnings growth, but there were a lot of one-offs this time. And hence, the adjusted number was about 7.5% earnings growth, which is not bad compared to the previous 3 quarters. And when I decode into 2 parts, which is banking and financial services, which are 92 companies, and non-banking and financial companies, which are 406 companies, the most interesting thing to note is that the non-banking and financial companies, the non-BFSI space, which was seeing very anemic growth, saw a very decent growth in double digits. And most important point is that 75% of our universe, which we track, actually had met earnings expectation or there was a beat. So this was one of the best quarters in the last 4 quarters, which we saw on the earnings growth side. And that's how market have responded to. Going into the next 2 quarters, we believe the base is extremely low. And incrementally, last year, Nifty ended with a single-digit earnings growth. Our belief is the next 2 years' earnings CAGR should be between 10 to 11%. And why we are saying that, Prashant? You looked at the fourth quarter numbers. The most important point was that after a long time, consumption growth is back to 6%. Not a great number, but not a bad number either compared to the previous quarter GDP numbers we saw. And the most important point was the construction and the investment cycle coming about 9-10% growth. Also, we saw that CAPEX numbers were released for the month of March. March alone saw 2 lakh crores plus of government CAPEX. Please put it in context that in 2015, what we spent in a month was the entire year's government CAPEX budget. And what we spent in last quarter of January, March was the entire year, budget for Government of India in 2020. So we have come a long way. And I think that shows that the capacity to spend is there with the government. And in this environment where there's geopolitical uncertainty, global macroeconomic uncertainty, I think the engines of growth are firing. The next few things which we want to understand is that liquidity will be better this year compared to last year, and full marks to RBI to turn themselves pro-growth from the month of January onwards. And today the system is surplus with about 1.5-2 lakhs crores of liquidity, which is very, very good from an equity market and business perspective. The second most important point is the monsoon have come in earlier. Though it's early, but we have to see the distribution, but it's a good news that, again, the monsoons are looking quite good. And the third most important point is that CAPEX and consumption, both incrementally this year, is looking better than the previous year. And the operating word is incrementally better, not amazing. So I believe that incrementally, if you look at things, I think macroeconomic domestically looks good. Global uncertainty will remain. And hence what we are saying that markets will be in a consolidation mode. and it will be a bottom-up stock pickers market as you move ahead.
That's an interesting point. Pankaj, morning. Great to be listening to you today. That both capex and consumption are looking better, but incrementally better. They're not amazingly better. Problem is, when valuations don't move incrementally, they move in gallops, right? They gallop ahead. So that's the problem with our market. But no, jokes aside, I just want to, dive a little deeper into that point. I was just highlighting, even this morning, for instance, there seems to be some sort of a, position build-up happening in FMCG stocks. I guess, A, because they're under-owned. They've just not done anything for so long. But just expand on that point. So in this phase, if someone is to make fresh allocations for the next leg of the market, should bulk of that continue to go towards capex-heavy sectors that have done well, whether it's defense, it's capital good place, etc., or should more of that money be allocated to these underperformers from, say, the FMCG basket?
So the problem, Surbi, is unique to, it's common to every fund manager. The stocks where earning growth is coming in, valuation is not giving you comfort, and valuations are expensive. Where earnings growth is not coming in, valuations are comfortable, but stock doesn't move. So how to manage that on the portfolio side? I think the way we are adopting for the last 6-12 months have a right balance so that you don't get caught up on the extreme valuation side, as well as you don't move into a value trap, because there are market share shifts happening within a sector and within players also. Also, you spoke about consumption as a basket, Surpi. But look at the staples. They are seeing anemic growth, but there are many categories in consumption which are seeing very strong growth. For example, telecom, I would club it in consumption. Look at the way the telecom players are growing. And clearly, one of the largest players is been a winner for the last few years. Look at the travel industry, hotels, airlines, they all seem to be doing well. Look at the entire smartphone market now. It's a 3.5 lakh crore market, which a decade back was a very small number. And last year, the liquor market is now bigger than the jewelry market. So there are many different moving parts in the consumption basket also. And I think it will be more of a bottom-up approach in consumption, where growth is coming in and valuations are not so exorbitant expensive to, kind of look into that. On capex, we believe the T&D space is looking extremely good. And what happened in Spain a few weeks back, the outage, I think has taken the world by complete surprise, because the underinvestment in T&D has not only been in India, but globally, because of renewals coming in at a very fast pace. So I think transmission and distribution space will see a lot of investment, not only in India, but globally. And hence, companies catering to that space will see increased order momentum, and probably the runway for growth is very, very high. So I think you have to break down the entire sector into subsectors, go bottom up and choose the best businesses, keeping in mind valuations as well.
Pankaj, the other space is, of course, auto angs, right? I was recalling our conversation earlier, and last Friday we had the management of Samvardhana Motherson. And bulk of the conversation was not about autos, but about consumer electronics and the work they're doing there. And that is the case with so many other auto ancillary companies we speak as well. Not what they're doing in consumer electronics, what they're doing in, say, for example, areas like defense. Just talk to us about that. Are valuations here still attractive? I mean, should one really get some exposure if one does not have? And if you can talk about one or two names, would be really helpful.
So, Prashant, what's happening is that in the auto ang space, there are many companies which are pivoting themselves from traditional auto angs to non-auto. And the reason they are gaining momentum is because they are very, very good on precision engineering. There are few names in our portfolio, for example, Sansera. And just to give few thoughts without, a recommendation on buy and sell or any of these names, that few of these auto ang companies are saying that aerospace, defense, and semiconductor incrementally will become a decent position from their portfolio perspective, which was never the case for last 20, 30 years. And when we speak to the OEMs who are giving them order, and these are large companies, they say that we need to have diversification on our supply chain. For a large part of our last 20, 30 years, the supply chain was dependent on European as well as Chinese suppliers. And both of the places we see that there's uncertainty increasing. And hence we want to have few suppliers from India where they are good on precision engineering and we don't mind giving them the opportunity. And I think that's the pivot we are seeing, that they will be less cyclical from an auto industry perspective, and the incremental growth will be from non-auto and tech agnostic platforms. So I believe that there are many opportunities which are not so expensive. And if you take a 3-5 year runway, I think these companies can surprise you in the way the business model is shaping up. So that's one area where we are positive on. The other area where we were very early on is the specialty chemicals. And look at the last fourth quarter numbers. The 19 chemical companies we track on an average delivered 30% plus kind of earnings growth, which was one of the highest among all the sectors. And incrementally over the next 3 to 4 quarters, we believe that the restocking cycle is coming back. Many of the global agro and pharma companies are signing up large contracts with the Indian specialty chemical companies. And hence the runway for growth is becoming clear after 3 years of degrowth. And you have to choose your stocks, whether it be specialty or commodity chemicals. But I think this space is looking ripe for an outperformance this year as you move ahead.
Okay, all right. Lots of ideas there and lots of food for thought. Always great having you on the show, Pankaj. Thank you very much for taking out the time, and we look forward to the next conversation soon. Well, that's a view on the market. The market, by the way, is stabilized. The cut is about 200 points on the Nifty, and the mid-cap index is now trying to fight back into the positive side. There's a little flash of green, so it's stabilized now. And let's see, the question is whether the buyers now come in and buy the dip. That's already happening in the mid-cap universe, so let's watch for this. Let's move on. Then a big company from the auto sector on the radar now. This is TVS Motors. Restriction on rare earth magnets could bring production to a halt. This is the word coming in from TVS Motors MD Sudarshan Venu. He also adds that there could be cost increases for customers. In fact, Parikshit Luthra caught up with Mr. Venu on a whole host of issues, including some of these trade disruptions. And he also started off by asking him about Norton India's debut and opportunities in the international business. Listen in.
Norton will launch towards the end of this year and will start phasing in the products towards the end of this year and early next year. I think I've mentioned 6 products before, 4 of which will be available for the summer of 2026 in the 4 European markets of UK, plus France, Germany, Italy, and Spain, as also, of course, in India. So this is where I think we are heading towards by starting off with the launch of the 4-cylinder superbike at EICMA. And then we will also share the remaining 3 products soon at EICMA or soon after, which will be available in the market early 2026. They are all in advanced stages of development. I think we have a good leadership team now at Norton with the 2 executive directors, Arnie and Neviho. Supporting them are very good designers, engineers, and a lot of homegrown talent from TVS in India, which I think brings a great mix in terms of the Britishness and the uniqueness of Norton, while leveraging the capabilities of TVS and also offering opportunities for our talent to grow.
Right. So there's a lot of competition in the premium space in India as well, in the 350 to 500cc space. And 650 is a space which Royal Enfield has been leading. Could you give us a sense of where your bikes would be playing, in which segment, and how many bikes will the Indian consumer be able to reach out to in India?
I think we will start, as I said, with the 1200cc superbike. We will have other smaller offerings as well. But we will draw a line on how we ensure we keep Norton Premium, keep it in the luxury space, and offer bikes that are uniquely differentiated and uniquely Norton in terms of the 3 values which we have articulated, which is design, dynamism, and detail.
Right. And what will be like the retail strategy for it in India and
We'll
globally?
definitely have a differentiated retail strategy in India, covering Norton and covering possibly some of the premium TVS vehicles as well. As I said, this will help us connect with the growing middle class of India and upper middle class and people with more affluence, and with Norton's even some of the top end segments who buy sports cars and other vehicles who also buy these very high end bikes. We will connect with different retail formats that are uniquely catered to them and offer them that superior and differentiated experience.
So there'll be like more experience centers, more showrooms, specific
Definitely.
showrooms for...
Absolutely.
How many are you targeting for India?
We'll share more soon, but I think definitely we will cover in the first phase the big cities, and then after that move on to other cities, and we definitely intend to offer the entire Norton range in India.
Speaking about electric vehicles, 25% market share in the month of May. That's what we pick up. You were the leading player, and you have been the leading player for several months now. The competition is stiff, but you're steadily growing the market. What's going to be the strategy from here on in terms of building your EV portfolio?
We are committed to building all segments in EV that we believe make sense. And so we have the TVS iQube, which of course has done well. We have now started retail of the TVS X, which is sort of a flagship scooter, which shows the capabilities of what we can do in terms of technology and materials and really creating a fantastic riding experience. And you're resonating with the young customers in terms of connectivity, in terms of use of advanced materials, in terms of design. We're also launching another electric scooter this year. And we've done the One Make Electric Racing Championship and also the electric three-wheelers and electric bicycles as well.
Okay, so if we were to ask you how many electric products altogether in FY26?
I think in FY26 we'll look at a couple of new launches. One is, of course, X has already started retail. There is an improved iQube and one more new scooter.
One more new scooter coming up. How does the market look to you currently, and are you looking at increasing capacity? What is the monthly run rate that you're looking at?
I think we are increasing capacity and the volumes have grown. At the same time now there is this whole supply chain challenge in terms of China banning the export of rare earth, high rare earth HRE magnets, which are actually very important for our motors and other parts of the EVs. So this EV supply chain disruption is certainly going to pose a short to medium term challenge. And I think as India plans its EV strategy and EV plan, the adoption will have to be phased in or phased up, along with developing an Atmanirbhar supply chain in India, where India, as the world's leading two-wheeler market, which has produced 3 of the top 5 companies by volume globally, has its own supply chain, its own R&D, its own capability, and EV is really built on that basis.
Right. How badly is the restriction by China on supply of rare earth magnets impacting TVS Motor Company right now in terms of
I
production?
think in the short term it will impact the entire industry a fair bit. As we go forward, we have to develop new solutions, develop new components, new suppliers, and really work our way through this.
So is it already, for the industry, is it already showing on the monthly numbers?
I think it will start showing soon.
Start showing soon?
Maybe in June, if not definitely in July.
No, some bodies have really sounded the alarm bells, saying that this could literally bring EV production to a grinding halt. Would you go to the extent of saying that?
It is concerning, yes, Parikshit, it is concerning.
It could bring it to a halt?
Yes.
How bad is it for the industry?
I mean, a halt is pretty bad, right?
A halt is very bad.
And it doesn't get that much worse with it.
Yeah, yeah. So we could look at a complete...
Yes, it is a significant challenge.
And how are you managing it?
Of course, like every company, we are trying to see how to de-risk. But again, there is a huge price impact which ultimately has to be borne by somebody. And then there'll be cost increases or other price increases to the customer. So all this has to be factored in, which is why I think it will be a medium-term, short to medium-term challenge that the industry needs to work its way out of. On one hand, we are launching products, we are committed, we have invested a lot of capex. You have seen that we have done a lot of exciting launches and our volumes have also grown. This is definitely a challenge that there's an industry and we have to work through, and over a period of time develop an ecosystem of components and R&D in India so that we bring volumes up in a way that is sustainable and in a way that's Atmanirbhar and made in India with Indian R&D, with Indian products and Indian technology and supply chain and natural resources all linked up.
Yeah. So you're expecting from June onwards it will start showing in production figures, and there'll be very significant production cuts?
Yes, there'll be cuts.
Yeah. And what kind of export growth are you targeting? And how many more countries would you like to reach out to?
We are in many countries already, and we, of course, as there are opportunities in industrialized countries, we will look at entering new markets as well, and also new segments within those markets or new ways of doing things in some of those markets. In terms of Africa, I think Africa has bottomed out and is turning around and now starting to look up. So definitely exports growth for us in the last few months, as you have seen, has already started moving up, and I think this will continue this year.
Right. How much do exports contribute as far as your total revenue is concerned, and where do you plan to take it by 2030?
Exports today are close to 30, I would say international business, because it's a question of now in some of the countries we are assembling, in some countries we'll manufacture. Future regulation may require more manufacturing in these countries. There'll be more products aimed at these markets. There are people operating or focusing on these markets, some of them in location. So I would say the international business is about 30% of our revenue, and I think it can be 40% or more by 2030.
Okay, so that's the word from TVS Motors, and the supply of those magnets, the rare earth magnets from China. That is very clearly a concern for the industry when it comes to EV production. Stock has had actually pretty good numbers. The May sales numbers for TVS are good, 17% growth in overall sales, and right now down 1% because the market's mood overall is a little offbeat. Well, with that, let's move on and get the next company on the radar. Apollo Hospitals is what we're tracking now. And the company delivered quite a robust performance for the fourth quarter. It was very much in line with street estimates. Improvement was seen in margins as well as in occupancy levels. Let's talk about this performance and the outlook. We have with us Ms. Sunita Reddy, Managing Director at Apollo Hospitals, joining in. Ms. Reddy, good morning. Always a pleasure to have you on the call. And it's been a strong finish to the year. I mean, I think across parameters, whether it's occupancy, ARPOB, margins, you've been above street estimates. Let's talk with, some sort of a, outlook as well. Can these levels, for instance, occupancy, we were at, I think, about 67% at the end of the fourth quarter. So do you see it kind of stabilizing here? What about ARPOBs? What's your outlook?
No, I think in terms of occupancy, we're nowhere near stabilizing. There is headroom for improvement, and we are targeting between 70 to 72%. Having said that, our metro occupancy is already at 71%. So we will push metro occupancy to 75% and system-wide move to 71%.
Okay, all right. So that's at the occupancy level.
With regard to ARPOB, clearly we showed a 7% increase in ARPOB, and that is the trend going forward. It is a mix of tariff increase as well as case mix. So with these, as the third element of it, of course, is payer mix. So we're quite sure that we can continue with the 7% increase in ARPOB.
Okay, so you'd expect a similar sort of an increase this year in FY26?
Yes.
About overall 7% in ARPOB as well?
Yes.
Okay, got that, ma'am. And this increase would be, again, would it be largely tariff-led, or would it be because of the higher-end robotic, etc., those high-end surgeries?
So there was a 10% increase in volumes in the higher-end surgeries that we call Congo. And this has been reflected in the ARPOB moving upwards. And going forward, it will continue to be a factor that will improve ARPOB as well as some amount of tariff increase.
Okay, got that. So 7% increase in ARPOB to be expected in FY26 as well. What about the international patient business, ma'am? I mean, how did that play out in the fourth quarter and the disruption that we've been seeing in Bangladesh?
Yeah.
I mean, to what extent was it still impacting?
Yes, I think Bangladesh definitely had a 2% impact over the whole year, and which is why, international patient revenues did not meet our expectations. But going forward, we have really diversified our risk. We are looking at new markets and do believe that we can move back to 7% of total revenues in the coming year with international patients.
Okay, let's also talk about Apollo 24/7 as well as HealthCo. In 24/7, I think the GMV was up 11%, and you've guided for a break-even by the second half, I think, of the current year, FY26. If you could just elaborate on that, and then also your projections for HealthCo this year.
I think HealthCo did very well because if you look at offline and online, there was a 17% growth in the offline pharmacies. More importantly, the margins grew by the EBITDA grew by 21% to 160 crores and giving us a margin of 7.8%. So this was extremely helpful. Online revenue grew to 292 crores and, it grew by 22%. And while this was not profitable because there was also an ESOP charge Net EBITDA for Apollo Healthco came in at 36 crores and a 9 crore profit. So that is a significant part that as we move towards 1,000 crore GMV per quarter, both the digital, it will definitely become far more profitable. Right now, as a company, Apollo Healthco is profitable. Margins are looking strong. They've, they're currently at 1.5% margin with offline doing, extremely improving in sales. So they do about 900,000 sales per day. So transaction volumes have picked up, asset utilization has picked up, and of course, we've added new pharmacies.
Okay, all right. So that business, you're sounding quite optimistic on that as well.
Yes.
On diagnostics, ma'am, the top line grew 9%.
Yeah.
But there was some margin pressure in the fourth quarter. So what happened there, and was it just a one-quarter phenomena? Because I think this year the street is expecting from the diagnostics business a margin improvement of as much as 300 basis points. So are those expectations well-founded?
No, I think that, the diagnostic revenue was only 198 crores for the quarter. There was an impact on two fronts. I think in terms of margin being at 9%, a significant amount of the volumes came from AHL Apollo Healthco, and therefore a slight dilution in margin. The second part of it is that they shifted from a franchisee model. They're in the process of shifting from franchisee to ownership model. And I think the results of that will play out over the next year, where you can expect to see both revenue grow as well as margin improvement.
Okay. All right. Ms. Reddy, let's talk about the CapEx plans for this year. I mean, specifically FY26, because you're putting a lot of money to work.
Yes.
I mean, you've stated that it's 6,000 crores of an expansion plan over the next 3-4 years. You're adding, I think, over 4,300 beds. So specifically this year, what's the kind of CapEx outlay and which are the geographies? I believe there could be a hospital coming up very close to us where we are, Worli in Mumbai as well.
Yes, I really want to get close to you. So
Lovely.
We are looking at a 3,000 crore expansion this year with several hospitals coming on stream. We should have at least 1,500 beds opening out. Worli is not happening. It will take post the rains. We'll start work in Worli, but we do have. We've acquired a hospital in Bangalore, which is a 180 bed hospital. We've acquired land next door, so we will have 150 beds coming this year from Bangalore. We'll have another 170 beds coming from Hyderabad, an expansion of 200 beds in Gachibowli, which is part of Hyderabad. In Kolkata, 250 beds, out of which 150 will become operational. In Delhi, in Defence Colony, about 40 beds will open out. And Gurgaon, in the last quarter of the year, 200 beds will be ready. Pune, we have 250 beds opening out. So clearly, we're looking at 1,500 beds opening out, opening by the last quarter of the year, and a capex of 3,000 crores for this year. As you know, we have free cash flows, we have money in the bank, and are adequately funded for this expansion.
Okay. Got that. Final question, Ms. Reddy, on overall sense on medical inflation. And what are you expecting this year? What kind of medical inflation should patients be ready for? And also just your thoughts. I mean, on a side note, there is a different model that, some of the industry players are trying out. I'm talking about PB FinTech. I mean, they're trying out a different healthcare foray. I mean, the idea is to try and bridge the difference in perhaps in objectives of a hospital company and an insurance company, a health insurance company. So just your thoughts on overall medical inflation and expectations on that front.
So medical inflation was at 4.5%. And I think that we're able to absorb that medical inflation. In terms of what you just mentioned, the model to really something like a subscription model. I think that currently in Apollo Healthco, we have an insurance offering. We've tied up with 4 players. We're just launching that this year. But with this insurance product, we will be able to look after, people don't worry about how they pay for their healthcare. And I think that is the most important step. The different ways of doing this, one, of course, is a subscription model. But I think we're looking at both aspects of it. But having a digital model is and taking, bringing it closer to the consumer and also showing them a way in which they can pay for healthcare, creating that environment, the ecosystem around the consumer. I think Apollo has, the ability to look after communities. We have large networks, so they were ahead of the game.
Okay, that's very interesting, ma'am. And now that the earnings are out of the way, maybe we can have you back on. I mean, this requires a deeper conversation and understanding.
Yeah, it is.
Yeah, we'd love to have you back on for this one.
And looking forward to you moving closer to us.
Absolutely.
Thank you very much, ma'am. Thank you. Well, we'll take I think what we'll do is we'll take a... All right, I think M&M is the next conversation, right? The reported sales for the month of May, they're better than expectations for both segments, auto and tractors. The company continues to gain market share led by strong continued demand for its SUVs. My colleague Sudarshan spoke with Nalikant, CEO of Mahindra Automotive, began by asking their outlook for the month of June. Listen in.
May has been a solid month for us, both on the SUVs, on the LCV front as well. On the SUVs, we sold about 52,431 SUVs at a growth of about 21%. On the LCV, less than 3.5 tons, again, we had strong growth, 8.8% growth year on year for us. So the portfolio has had strong traction and continues to be the case across all the different models that we have, including the two new BEVs that we put out there as well. In the analyst meet in May, we had projected that we'll do mid to high teens growth and volumes on SUVs. So with these numbers and what we are seeing out in the market, we are optimistic that we'll be able to deliver on those numbers for the year.
So for the next few months, what would be the most, like 2 to 3 important triggers that you think that's going to help the sales positively?
Yeah, absolutely. So Darshan, if you look at it, last year we had 4 major launches. We had 2 major ICE launches and 2 EV launches as well. So we had the 3XO we launched in late April, early May. And we had the ROX we launched and started deliveries in October. And then in Q4, we launched both the BEVs, BE6 and XEV9e. So for us, the most important thing is capturing the demand in all of these 4. ROX, we had about 6 months of volume last year. So we get the annualized benefit this year of the full year's volume on that. XEV3XO, of course, is doing quite well. And we have increased capacity, especially on the petrol front. So that gives us an additional room to increase volumes as well on that. And then the 2 XEV and the BE, we just started deliveries in late March. And we are already number 1 in terms of revenue market share. So we're seeing strong growth there as well. So key is to get these 4 models to deliver the volume growth for us while we continue to have very steady and strong traction with our Scorpio portfolio and the XEV portfolio.
I'll be coming to the market share, but before that, I would like to talk more about EV sales, because you do mention that your utility vehicle numbers do include EV sales. But can you talk about EV monthly run rate?
Yeah, so for us, as you know, we are only an SUV player. So all our EVs are SUVs as well. And our numbers, if you look at it, we delivered very close to 4,000 vehicles last month, and we did about 3,500 or so in April as well. So we are on track to having full utilization of our operationalized capacity. And if you recollect, we have an operationalized capacity of about 5,000 to 5,000 vehicles, 5,500 vehicles. And so we are hopeful that very soon we'll come very close to utilizing the full capacity of our plant for that.
Okay, now coming to the market share. It's been a healthy gain for both. If I can see that in April and May, PV market share has jumped by 3.4% year on year. Even on monthly basis, it's up 0.4%. Even EV front, it's a gain of almost 15% YOY and 3% month on month. Any target that you have set by the end of this fiscal, what do you think would be the exit market share for both PV overall and EV front?
Yeah, so market share for us is an outcome of the traction we see with our customers on our portfolio. So we don't necessarily put out a target for what our market shares need to be. We're focused on delivering on the volume projections that we put out there, and most importantly, on delivering to the customer expectations in terms of their bookings as well. So that's really what we are focused on. Now, of course, as we see what the industry projections are and the overall numbers, if we continue to keep this kind of pace and we do mid to high teens, I would think that there's a natural conclusion that there shall be some market share. But that's not necessarily something we're chasing on an ongoing basis.
And how is this raw material cost trend looking like in this environment of where like Trump every another day is announcing tariffs on several, so many products? So how is this raw material cost looking like first? And second, any pricing action that you are planning over the next few months?
Yeah. So firstly, it's a highly dynamic situation at this point in time. And it's hard to predict what will drop at what point in time and what we need to go to. But we, of course, saw some steel price inflation that happened in the earlier part of the year. And that's something we have passed down to customers in May. So we did a series of price increases in May. And it's heartening to see the kind of volume growth we have seen despite the price increase we put out there. But going forward, while it's hard to predict, we are reasonably confident it will be a benign environment overall. And of course, if there's any disruptions on specific commodities or any specific strategic components, we continue to watch it very closely. We have a playbook we put together for COVID, and we know exactly how to operate in an environment where such black swan events happen. So we will pull that playbook and work with that.
So which is the, which market, if I talk about north, south, west, east, which is the one or two markets that are basically helping you post out such a strong set of numbers?
Yeah, so what's very helpful and heartening for us is we are seeing growth across all of the different regions in the country. North, of course, has always been a backbone of our volumes, and that continues to be strong. West and East have also been quite strong for us. If we had to point one region which has really helped us grow, at least for the last few quarters, is South. And South is traditionally an area where we have punched a little bit lower than our weight, if I may put it that way. And really that has kind of stepped up here, both on the SUV side and also on the LCV side. If you see, we had significant gains on the LCV less than 3.5 tons of market share. And a large part of that came from the traction that we are seeing with our products, especially the new product, which is Vero, in our South markets.
Great. On EV front, over the last few days, we have been hearing from some of the two-wheeler companies regarding rare earth magnet supply. And because of the disruption that they are expecting, and they believe that if the disruption continues or disruption they might face over the next few days, it might have an impact on their sales. Are you expecting the same?
Yeah, so as you pointed out, China recently implemented an end-use requirement, end-use certification for all exports of rare earth metals. So that requires additional clearance with our customs agencies. We at Mahindra, we are covered for most of our vehicles for the next couple of months in terms of existing stock, so we are comfortable there. And most of our suppliers either have applied or in the process of applying for that end-use certification already. So that's a process which is underway at this point in time. Of course, we are also deploying other de-risking strategies. We are looking at alternate materials. We're looking at sub-assembly buying from other suppliers. But we're also working very closely with the government for faster clearance of these end-use certifications as well. So it's a multi-pronged approach we're using. But for the next couple of months, we are covered.
Great, great. Now, coming to the CV segment. So your main segment, that is the LCV between 2 to 3.5 tons. There I can see that you have been posting healthy growth. Even in the month of May, you have seen a growth of 14%. But one segment that is less than 2 tons, there you have seen a decline of 18%. And in the segment of more than 3.5 tons and MNHCV, there it's just subdued growth, it's just 1%. So by when do you see that these two segments, okay, we can consider that 2 to 3.5 tons, you might continue to see healthy growth. But overall, if I talk about CV, how do you see that overall demand looking like first? And what would be your basically industry outlook for FY26?
Yeah, so I'll limit my commentary only to the LCV less than 3.5 ton, which is the core business that we are in. Vinod runs the MTBD business, which goes beyond that. But our projections is about high single-digit growth is what we're projecting at this point in time. And there's a couple of reasons for that. One is we've had a fairly muted set of years on the LCV side for the last 2-3 years. And at some point in time, the replacement cycles need to kick in. And we're hoping this would be the year when we start to see some of the replacement cycles coming in. That should give us some volumes. Second is overall, the rural environment is improving. While there'll be a little bit of a lag in terms of from the good monsoon to what you see in LCVs, but we see that giving some kind of traction and growth for us over the next few quarters as well. And third, infrastructure as well as government sector are starting to invest as well. So that could be another area where we see some growth coming in. But like you said, relatively muted environment over the last couple of years. These triggers that I talked about should give us the growth that we're looking at, which is high single digits.
Okay, well, that is essentially the conversation with Mahindra Automotive as far as their sales numbers are concerned. Very interesting chat. Mitesh Thakkar is with us with what he'd want you to do as far as specific trades are concerned. Okay, before I go to Mitesh, the newer listings are all both coming up on your screen. AG's Wopac, I think, came up, and it's, I think, listed at a discount. It's coming up now. Let me just see where AG is. Lots of interest around this one, at least in terms of the business. Issue was subscribed about 2 times. I think 220 on AG's Wopac. And you can see both pictures coming in and the bell being rung. So I think 6.5% lower at about 220 is where the AG's Wopac listing is coming at. Schloss, which is Leela, Hotel Leela, that is also, of course, making its debut. And there as well, it's a slight discount to the issue price. So 406 is the listing price on Leela compared to the issue price of 435. And on AG's Wopac, 220 compared to 235. Although AG's Wopac has come off already quite a bit from the lows, and it's at about 230 odd rupees. So, yeah, I mean, normal kind of listing. Decent. Once in a while, I think we'll need to have normal listings, normal days as well, which we can track. All right, let's just bring in Mitesh Thakkar now. We can't ask him about listings without price history, but he can tell us what you need to do now. Mitesh, with this kind of an open on the indices in the broader space, what's your reading and what are your trades now?
Yeah. Prashant, Union Bank is something, and I mentioned banking in the morning call as well. I think banking will do well. So Union Bank is a buy with a stop at 150 or just below it, and a target of 158 is what I'm looking at. While the other good stock is Tata Chem, which is a buy with a stop just below today's low of 880, so 879, look for a target of around 940.
Okay, those are the calls coming through on individual names right now. By the way, Mitesh, Reliance Power. I mean, what a move last few days, right? I mean, I think this, if you just look at the year so far, stocks up about 40%. Last month was big. The month before that was big. How is this one looking technically?
So something apparently has changed over here, Prashant. I think, I was looking at a target of 60, which is where the stock had some bottoms way back in 2014. It's right there. In case we start moving beyond that, and that still looks a good possibility and a strong one at that, I think this could be a 3-digit stock in the next few months to come by. So maybe, traders who are there, I think just hold on to this stock, trail your stop losses to a slightly deeper basis, because this is a positional kind of a call which I'm looking at. So it stopped, just below levels of 48, 47.5 is what is recommended. But I think this could be a good hold for the next few months to come.
Got that. Mitesh, thank you very much. Those are trades coming through in terms of calls as well. Time for a quick commercial break here. Manisha Gupta will be with us to focus on commodities in just a bit from now. Stay tuned. Okay, welcome back. I think we've got the market, which is down 170 points, 24,580. So things are looking sideways to lower. Let's just quickly run you through, a couple of stocks which are moving around. By the way, a lot is now, and broader markets are looking very, very vibrant, by the way, even though the index is down. So it's a healthy screen, I would say. Our Power is the biggest volume-led gainer by far, by the way. AstraZeneca is coming up with a sharp 10% kind of a gain. We don't see that very often. It's a almost 9,000 rupee stock, AstraZeneca, but humongous volumes at this point. Genus Power is up about 6% or so. It's the number 3 largest volume traded name. GE Shipping is up 4%, coming up with humongous volumes, so 963. GVTND, 5% almost, big outperformer, so 4%, 4.5%. Look at Sterling Wilson Solar. That is up 7% and is back above 3%, back above the 300 rupee mark. And there's so much else. I mean, Transrail, Anand Rathi, Spark, and Azad Engineering, Quick Heal, Cosmo First, 5, 10, 15% moves here, so to speak. So we'll come back to some of these in a bit. But from equities, let's also shift focus to what's happening on the commodity side of things. Manisha is here with exactly that. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with the crude oil prices because we've seen very strong gains come in for this one. Remember, the month of May has been on the stronger side as well, and June has started almost a couple of percentage points on the higher side. And this is coming in after 2 weeks of decline that we have seen in for the crude oil prices. Well, there has been a lot of conversation when it comes to geopolitics, to tariffs as well. But what the crude prices seem to be taking sense from right now is the OPEC Plus meeting. This was on Saturday, on 31st of May, where the OPEC Plus has decided to increase production for the month of July by 411,000 barrels per day. This is on expected lines, is the reason that the markets have reacted on the higher side here. The OPEC Plus also have said that the increase could be paused or reversed as the market conditions be. So they're quite flexible on this, and that really seems to be supporting the prices right now. Having said that, when you look at the first quarter, the global demand stands at a growth of 1.2 million barrels per day. This is higher than what the street was anticipating, given the fact that we was only talking about tariffs and China's weak demand, but the global growth has been on the stronger side. Now, going forward for the rest of 2025, the expectation is that you could be looking at higher demand overall. OPEC talks about 1.2 million barrels per day. World Bank is suggesting 1 million barrels per day of a demand growth for this year, while Goldman Sachs, IEA, JP Morgan are not so bullish. They are talking about 0.6 to 0.8 million barrels per day there. But having said that, all of them do expect demand growth going forward for the rest of 2025 there. OPEC also is projecting that this demand will continue to increase. And while we stand right now at 103 million barrel per day of a global demand, 120 is where we could be by 2050 is the view coming in from OPEC there. Interestingly, much of this demand really is coming in from Asia as per IEA. As per their survey, they say that Asia will account for 60% of this demand growth going forward, and 25% of that demand growth could come in from India alone. Let's talk about prices now. And as I was telling you, the month of April wasn't so great, but the month of May has ended on a positive side here. So while April saw 15% of a decline, May saw 11% of gains for the prices. Also, when you look at year-on-year basis for the crude oil prices, well, 2025 till now is in the negative of around 11 to 13%. But we also have seen prices continue to decline in the last couple of years as well. So the crude prices have continued to be in a negative for a third straight year. The final plate should talk about on what is the outlook for crude oil prices going forward from here, and that clearly has been revised a lot of time from many of these banks and brokerages and almost to the lower side here. $60 a barrel of an average is what the markets believe could come in from Goldman Sachs and Citi. 64 to 66 is what World Bank, pardon me, and JP Morgan seem to be talking about. Let me also remind you that in 2024, the crude average was $80 a barrel. Now, this year, we are talking about $60 to $65 a barrel. So clearly a step down in sense of prices.
All right, Manisha, thanks very much for that. Well, let's focus on some stocks now. And Mangalam is here tracking FMCG stocks. Government has slashed the import duty on crude oil, edible crude oil. Mangalam, take us through what this means.
No, that's correct. You know, sometime last September, if you noticed, there was an increase in the duty for imported palm oil prices. And as a result of which, there was a sharp inflation that we saw in palm oil prices. And the third quarter and the fourth quarter results would show that the FMCG margins had shrunk, specifically for the ones that made soap and, biscuit companies, etc. Now, from the peak, we've seen a big decline of almost 25-26% in palm oil prices. Palm oil, and remember PFAD, a derivative of that, are important inputs for both food as well as soap companies. So a lot on the street were hoping for margin expansion for FMCG companies beginning first quarter, second quarter of FY26 itself. And to add to that, now there is a special benefit that is coming from the government, which comes in as a sweetener. So the duty has been reduced from 20% to 10%. So in an any way downtrending palm oil price market, a duty reduction is just a positive, and that's reflecting in the prices of names like Britannia, HUL and GCPL. On the other hand, though, we are seeing some decline in names like AWL, the erstwhile Adani Wilmar, and Patanjali Foods is seeing a mild green. But remember, these are the ones that do not stand to benefit from reducing prices scenario. Over the last couple of quarters, their EBITDA had seen a big jump because their realizations had increased. Now with palm oil prices coming down, duty is coming down, the realization for their key products, the edible oil business, may come down. So as margins for the FMCG companies which are gaining increases, the margins for these companies will reduce. So that's the sum and substance of edible crude oil and the duty reduction.
All right, Mangalam, thanks very much for that. Well, that's the FMCG pack in focus on the back of the duty reduction. Emphasis was down sharply in the morning when we started. Rima is here with details. Rima, morning.
Hi, morning. So Mint is reporting that Emphasis has lost its third largest client, that's FedEx, and FedEx approximately accounted for 8% of Emphasis revenues. Now, FedEx seems to have chosen Accenture over Emphasis for its work, and the business transition of the IT work will happen towards the end of the calendar year. As I said, FedEx is reportedly Emphasis' third largest client, so it's going to hurt if this news piece is true. Mint reached out to Emphasis. They've just responded saying that they continue to have a robust and expanding pipeline, but today the stock is under pressure on the back of this development.
Okay, Rima, thanks very much. 3.5%. It's off the lows by a little bit, but not much. That's Emphasis with Rima. We'll take a quick commercial break here, but stay tuned for more unmatched insights and unparalleled market coverage. Keep watching. Nuvama presents CNBC-TV18 Market Central.